Regulatory developments first. We've got some new solvency regulations coming into force in Guernsey, which will apply to insurance companies. What do you think the effect's going to be in 2015?
I think initially there's not going to have a big effect. I mean, the tests that were done, a number of companies didn't get up to the right prescribed level, but I think for the vast majority they were comfortably above that level. And I think for most of the managers and for most of the companies, it's not going to have a great impact in terms of the way they're running their business. I think, like all these things, in the first year, getting a better understanding how to complete the forms and all those kind of issues may take some time, and all time to take time to bed in because of that. But overall, I don't think it'll have a great impact in terms of the day-to-day running. In terms of the impression of the island and its reputation, I think it will improve because of that. But we're a long way away from Solvency II and going down the prescriptive route that is at the moment.
I agree, and I think that's the key point, because Guernsey FSC on the one hand and Guernsey need to be able to demonstrate that we are, in accordance with international standards and taking a risk-based approach, and so some sort of model needed to be developed. But alongside that, we've got to retain the pragmatism and so on. And what I think we will feel comfortable about is I agree from all the testing, and there's been quite a lot of it. Almost everybody passes the model, which is pretty robust. And on the other hand, we know that Guernsey FSC have some leeway in terms of allowing certain either transition periods, or they still have the ability to amend if they want through their own judgment. So I don't think it's going to cause major issues for anybody. No doubt there will be a few insurers who will have to apply more capital or change their business model as a result, but it won't be a lot out of the many hundreds that we have on the island.
Yeah, and also think really where we'll have an impact is really at the edges, really. So at one extreme, it may be the larger insurers who will say have to relook at their capital on a day-to-day basis. And then at the other extreme, it may impact the smaller business coming through as well. I mean, a lot of business still goes through sales. They're fully funded. So from that perspective, it's probably not so much of an issue. It's probably the smaller entrepreneurial companies who are looking to set up their own captive or PCC that they're going to have to look a little bit harder in terms of their capital requirements. Mm-hmm. How do we think that Guernsey being outside of Solvency II will improve the business model for captives and insurance companies?
Well, I think we all know that Solvency II is flawed. So not following the Solvency II model is a good thing, and it's a good thing that we've created our own. I do still think people have probably underestimated the potential impact of us not being in. So there are advantages and disadvantages. The advantage obviously is exactly that. We can create our own model. We're in our own space. A lot of our business doesn't interact with Europe actually necessarily that much. So does Solvency II really matter to us? I'm not sure. Against that, for certain businesses that do interact in a Solvency II environment, it probably will have some sort of impact, but I think one outweighs the other. In an ideal world, as we all know, and as Bermuda has been trying to achieve, you'd go for the bifurcation where you'd have a class of insurers which was Solvency II equivalent and a class which wasn't. We haven't gone down that route, and we don't know whether that route is possible. That's probably one to keep an eye on for the future. But in the meantime, Guernsey being outside the Solvency II framework, I would say, is definitely a good thing.
It was interesting actually, because there's been a judgment only today by in connection with the ECB, saying that the ECB can actually issue bonds, because there was some question as to whether that was a lawful power of the ECB. It kind of goes to a fundamental of Solvency II altogether, which is that if the ECB issues bonds, they're going to be junk grade. So who's going to buy them? Solvency II, if the kind of organisations that are having to comply with Solvency II are the ones that are supposed to be buying these bonds, then Solvency II can't work, and it certainly won't play part of the solution to buying that kind of debt. So there's an interesting problem, and there are people that have been talking about that from quite a long way back now, saying actually it'll never really happen because those organisations, those big reinsurers and insurance companies are part of the buying market for that type of debt. They won't be able to buy it.
Mm-hmm. We're seeing a lot of European interest in Guernsey because it is outside of Solvency II. There's no question about that. And not maybe from the major players, but from maybe the mid-sized brokers. And they're seeing this as an interesting angle for using Guernsey. So yeah, from that perspective, it's a good model to work on. Yeah. How much do you think Guernsey is reliant on the cell company concept?
A little bit too much at the moment, I would say, in terms of growth terms. I mean, we definitely, the bulk of our business remains non-cell, but in terms of where the business has been coming from and where it is going to over the last 2-3 years and probably the next year or two, it is all driven by cell business. I think we all know that the captive market is fairly static, and I mean in the purest sense. I'm not saying new ones aren't being formed, because they are, but equally licenses are being relinquished and therefore it's pretty flat. Whereas the cell business is booming, as is the incorporated cell business. So we are hugely reliant on it at the moment to derive new business. And I think we do need to keep an eye on that, because make hay while the sun shines, by all means, no doubt about that, and we should take advantage of it, and we are, I think, a whole group of us very well. But we need to keep an eye on other opportunities as well, and not just put all our eggs in one basket and say we're a cell domicile. We should be other things to other people.
It's getting on for 100% of what we're involved in at the moment is new cells and new cell structures, particularly in the ILS sector. Lots of people forming new cells, and actually the number of cells isn't actually a very good measure of the amount of transactions, because many of the cells that are going on are writing multiple transactions. So there are literally hundreds more going on the starting blocks than was the case 4 or 5 years ago. On a positive note, I mean, from a lawyer's perspective, we get asked and we get employed by foreign governments and regulators to help them set up their own PCC legislation and ICCs, and they're not always in a directly competitive market. They might be using it for investment funds or so on, but the fact that the jurisdiction does that really well is quite a good selling point from our perspective.
Well, we're undoubtedly the PCC experts worldwide here in Guernsey, and so we should be proud of that, and we should take advantage of it. And so all the cell growth is fantastic. I think it's just what we find to sit alongside that, so that we're actually growing some other segments of the business at the same time, whether we go back to the captive model or whether there are other opportunities in insurance and financial transactioning, that we're so focused on the ILS and the cells that we're not maybe looking at other areas enough.
Yeah, I think there is an exposure there. I mean, it's also interesting, and certainly we found over the last year, that if it's not a cell, and if we're setting up an insurance vehicle, it's a PCC. It's not a captive. Yeah, so it's either one or t'other, it seems, at the moment. And I mean, there's been a lot of discussion about, should we open ourselves up to the reinsurance market and actually bring some of these insurance companies coming through? But that is not an easy process. And yes, it's an area that we as a group need to sort of consider and think about going forward.
There are hybrids happening though. So there are a couple of things that we're working on at the moment. One is there's a hybrid captive where a third party is going to take some listed pref share class in a captive. Those two companies, the owner of the captive will retain control over it, but they've got a third party that they're in joint venture with, who's buying that capital across an exchange in order to share the underwriting profits of a large project that they're doing, which is a great thing. One of the other ones, which is very interesting, is a hybrid fund and insurer in one limited partnership. So the general partner is the insurer, but the funds can be called in for underwriting over a period of time, like in a private equity structure. So you can use that for securitization, where you don't need all the cash up front. You need to bleed it.
So you can draw down effectively.
Yeah, which is would be I think a unique thing from a fund point, because it means you don't have to have an ILS fund and a transformer vehicle. You can do them all in one structure, and it's actually much cheaper than a company as well. So those are quite interesting. We have to win over the regulatory side as well. So.
Well, absolutely. I mean, it's interesting. We have been looking at one particular case where it's really an investment fund looking to set up a vehicle but put some insurance wrappers around it, and there's a combination of the two. There's nothing really there, regulatory-wise, to actually sort of adapt or cope with that particular issue. But I think it is the way forward, actually, because it's the combination of those two markets, and for Guernsey to provide the sort of administration and the infrastructure behind that to actually run those effectively would be good for future growth.
The offshore world is under intense scrutiny, has been for years, but it always seems to get more and more intense on tax and the issues of offshore tax. What are your views on Guernsey's place in that, and where we stand in the world, and what are the advantages of being in Guernsey from a tax perspective, if any?
it's a difficult position for the whole of the offshore world, I think, at the moment. Onshore jurisdictions are looking to make sure they generate as much tax income as possible. And there are various different approaches to that. You can have the French approach where you put everything up to 75% and chase people offshore or to other countries like Russia, or you try and develop business to make sure that there's more coming in. The problem that we've got in the offshore world is that there's a lot more lobbying activity going on from certain organisations, and they are kind of developing a very simple message, which is that anything that's offshore is wrong, and patently that's really not the case. There are very good arbitrage reasons and regulatory reasons why the business which is done here, for example, can't be done in London. So for example, in London, you can't have a PCC. It's not possible to form one. It's not possible under the regulations to have a managed captive in the same sense as we have them here. The professional services don't exist to do it. Generally speaking, parent companies, say from the UK, are going to have to pay tax one way or another. Either the money is used for reserving or it's repaid, and that's the way that the tax focus happens on captives. So very largely speaking, this market is not a tax play in the same way as private family structures might be, or other types of personal wealth. So I think as a market, it's something that really stands quite resiliently against that kind of discussion and background and the polemic that we have coming out of the political parties. And I think it's actually much easier to defend that than it is other industries in the island.
No, I agree. I mean, I'd make two comments to that. I think in our industry, insurance, you're exactly right. Really, there isn't a tax play, particularly at all. To be honest, one of the biggest pieces for us is the regulatory piece, and I don't mean capital arbitrage, I mean communication with the regulator. The fact that I've got the regulator's direct dial on my phone and I can just pick up the phone and ask them a question. Well, your chance of doing that in an onshore domicile is zero. So that makes a massive difference. Speed of setup and speed of communication and ability to discuss and be pragmatic makes a massive difference. That's a big selling point. And then if you look at Guernsey PLC as a whole, yes, we are a 0% tax domicile, but actually really the focus is more on, and there are elements of tax structuring, but a lot of it is about tax neutrality, isn't it? It's the fact that we are just a conduit. Money flows from A to C through B, and we're B, and there's no leakage. There's no leakage in the structure of those funds. If there was leakage, then people wouldn't find it so attractive. So the money ends up probably at both ends of the spectrum, onshore anyways, and being taxed. It's just not being taxed in the middle.
Yeah.
And I think people forget that. They see us as some sort of money box. We're just saving people tax, and that's not quite often the case.
Yeah, I think we have to be a little bit careful sometimes, though. I mean, there is definitely a perception issue, and that's whether it's here or other offshore domiciles. But in certain areas we do struggle, and for example, we're still on Italian's blacklist, for example, to do business here. So we still have a lot of work, we as an industry, but also the states. And to a certain extent, the regulators have a lot of work to actually get that message out. And I totally agree with what both of you said in terms of the way the tax structure works over here. It is effectively tax neutral. And the reason why a lot of people come here is because of the expertise, the infrastructure, and the way we do business. But we still have a little bit of work to do on the tax side. And I think that's an area we still need to focus on going forward.